All right, we should be away. Sorry about that, guys. I know some of you were joking, saying that this is taking longer than Centrelink. I'll explain why in just a tick. All right, we are live. YouTube has been updating its systems, and it has updated my YouTube stream key, which you need to stream, and it didn't tell me. So not only that, Louis was actually crying. So that's always the way, no matter how late you push it back, that he's going to wake up at 9 o'clock at night, isn't he? Anyway, thanks for tuning in. There's 150 of you already. One dislike. The dislike's gone. That is a good sport, whoever did that. Thank you. We're going to talk about the US dollar, the US dollar milkshake theory, how low the Aussie dollar can go, as well as keeping an eye on our old friend Bitcoin to see if we can get through these resistances. And I hope you're all going well. I hope you're all isolating. I'll have a look at some questions first, again at the end, while we let everyone tune in. So someone's asking about Harry Dent. Yes, that is one of the books behind me there. Harry Dent talks about deflation and the demographic cliff of old people retiring. I don't believe his theories are going to come true. I think the thing that Harry's got wrong for many years and he's getting wrong again is that central banks are going to do unthinkable things. So normally, yes, we would have deflation because that's what the fundamentals say. People are retiring, but central banks are going to print infinite amounts of money and they're going to pick up the slack. So every retiree that sells their shares, just like we've seen in Japan, we're probably going to end up with the Fed just printing money and buying those shares off the retirees to keep markets propped up. Crypto Spider says you're missing date night. Are you still allowed to go on date nights these days? I saw on the news before Tinder had 3 billion swipes in one day, which is a new record. So everyone's on the couch at home. Property prices in hyperinflation, well, everything goes up. Can't imagine it going higher. Well, if it didn't go higher, then you'd be able to buy a loaf of bread for, a loaf of bread would be cheaper than a house. So everything goes up in hyperinflation. As Terry answered there. Are the Liberal Party good economic managers? I think all governments have just thrown economic management out the window at the moment. And that's going to lead to some very interesting conversations about what is money. We've got the US debt clock here in the background. Trump's committing to another $2 trillion by the looks of it now. So people are going to start to ask, well, why do we need the Federal Reserve to print money if the governments are just spending money? It's going to skip that step. Central banks are very powerful. If you've read The Creature from Jekyll Island, very interesting book, but anyone with power doesn't give it up easily. So it's going to be even more of a battle. Imagine all those tweets that Trump was doing to power if he didn't have to justify himself or ask power. Imagine if Trump could just set interest rates at negative 1% and borrow as much as he want to spend as much as he want. And that's, I guess, the danger of what's happening now. And I think it all ends in hyperinflation or inflation, depending on what country you're in. Okay, it's fantastic. We've got over 250. Let's get into it. We know the government have been spending big and the debts are blowing out. But one thing that I think people are still not understanding is why the US dollar is going up in strength. So if we head back over to our chart and bring up DXY, which is just a basket of different currencies, the euro has a majority weighting in here. I think it's 30 or 40%. So this is I guess a bit of a representation of how strong the US dollar is compared to everything else in terms of the top 5 currencies. So Japan, China, the euro, the pound. And at the moment, there's been a flight to safety. So from 88 up to 103 the past couple of years. And more recently, when things got really rocky, people went into the US dollar. Now, when they start printing trillions of dollars, you should think, well, hold on, if they're making their currency worthless by printing trillions and trillions, wouldn't it sell off just like we see in Zimbabwe, Venezuela, all those different currencies? That paper money, if you print infinite amounts of it, it loses value and it goes down. So why is the US dollar going up? Well, at the moment, the demand, the safe haven, demand from real world investors is outweighing those sort of future concerns. So yes, eventually all that money is probably going to lead to inflation and become more worthless compared to other things out there. They have to pay down the debt, the 23 trillion, probably 25 trillion or more by the end of this year, even closer to 30 trillion. So that all has to get paid and created in some way in the future. But at the moment, we've got investors not worried about that. The next thing we look at is who's holding the foreign debt. So all those US, those bonds that they're printing, who's buying, who owns all the US debt? China and Japan are still the main ones there. And lately, a lot of them have been selling. So the next chart we look at is who is buying all this debt. As the debt ceiling, it doesn't even get spoken about much anymore, but if you've been an investor, you'll know that every couple of years they have this debate, and they Congress, and they get together and they have these really important conversations, and then they set this debt ceiling, and then 2 years later they just burst through it again. And there's no point in having this debt ceiling, but again, it's just another thing, paperwork, red tape, doesn't make any sense. So here's the percent of people, foreigners, that hold US debt, and that has been declining in recent years. So they are selling all their bonds, and China and Russia, for example, are buying gold. They're not that interested in the US dollars anymore, and they want to move away from that as the world reserve currency. But the really interesting thing here is that is the last thing that the US actually wants. If everyone is selling your bonds, then the interest rates rise on those bonds because they've got that inverse relationship. And watch the videos I've done about bonds if you don't understand that. So this is where the Fed have had to step in, and here's the spike in their balance sheet back in 2008. Let's just have a look at more recently when things have gone really parabolic. So this is the first lot of $2 trillion that's been passed through Congress. The Fed have also committed infinite amounts of money to lending to the banks, and that is different to buying bonds off the government as well. So a little bit of a bait and switch there. But basically the Fed have come in and said we can't allow countries around the world, investors, to sell these bonds because it's going to put up interest rates. And what happens when you've got 23 trillion of debt, or a household has $1 million mortgage, and then all of a sudden the interest rates on their debt go from a couple of percent to 5%, 6%. This is at a time when people have lost their jobs. So not only have they got less money or no money until they get on government support, the last thing you want is interest rates rising. Now, the other part of this conversation is once they've printed all this money, it's not getting into the real economy just yet. Now, everyone is bunkering down because of this crash that we're in. So all these dollars aren't being spent. People are really worried about what's going on, and everyone is buying US dollars. There's a huge demand both overseas, as we've seen, and locally for US dollars, just to sit in while the markets crash and wait for the dust to settle. Now, once everyone's happy that the dust has settled, things are going back to normal, all of a sudden that money is going to start to be spent. You might buy some shares. You might decide to buy that house. People that are getting all this money are probably going out and buying a lot of groceries at the moment. So we might start to see little pockets of inflation. If everyone gets a couple $1,000 stimulus from the government and they're worried that food is going to run out, that is what happens in places like Venezuela and Zimbabwe. And all of a sudden, the grocery stores put up their prices. The government don't want their citizens to go hungry, so they print more money. And then they go to the supermarket with twice as much money, and you keep going around that circle. And money can't buy food and goods and real things if you're not producing them yourselves. And that's where it gets really tricky. Or if there's not enough supply even. So forget having to buy things off other countries, and devaluing your currency, and other people are saying, well, we don't want to give you our computers or our resources because you're just printing money out of thin air. We don't want those worthless whatever currency you hold. And this is where the US have had a really unique entitlement or privilege as the world reserve currency. They basically get to do that because there's such a huge demand for dollars all around the world. Things like oil being traded in dollars, all that debt that we looked at, all these people, once they borrow money from their banks or whatnot, once they've got US dollar debt, particularly the emerging markets, they've got to do everything they can to pay that back. So an easier way to try and understand this is if I have gold and you want to borrow that gold, and you've got to pay it back to me, but then gold starts going up in price, and you're always saying, well, geez, I need to get that gold because it's getting away from me. It's going up in price, and there's no one else that's got gold. So this is the same thing. There's fewer and fewer dollars, and everyone is trying to chase whatever dollars they can get to pay back their debt while their currency is going down. So it's this cycle where their currency, the Aussie dollar, for example, if I borrowed money, let's say AUD USD. If I was an international investor and I wanted to buy a house in the US, or I wanted to buy US stocks, so I think, it's a really good time to invest. I'm going to take out $1 million loan. Now, when the Aussie dollar was $1.10 against the US, that $1 million loan, US dollar loan, would have only cost me 900,000 Aussie dollars because the Aussie dollar was actually stronger than the US. But now, look at what's happened. My currency has fallen. So all of a sudden, I go, oh wow, I've got to pay back that $1 million loan that I took out in the US. Now, that's gone from me requiring 900,000 Aussie dollars to actually requiring almost 2 million Aussie dollars. So if I'm in the same situation I was in, my cash flow, my business, my income, it doesn't matter now because I've actually got to pay back twice as much. So this is the situation that countries, these emerging markets, businesses around the world, other banks, other governments that have got funding from the US and loans and whatnot, this is the situation they find themselves in. So they are desperate for Aussie dollars. And this is why we call it the milkshake theory. All these countries around the world have all got a straw in the milkshake and they're trying to suck up any US dollars they can get. So no matter how much the Fed print, it used to be QE of 40 or 50 billion dollars. I was joking that it might be $1 trillion a month. Well, now it's $1 trillion every couple of days at this pace in these bailouts. And they're saying they've committed to infinite, basically, printing. So they're really scared because the trillion is a big number. And if it actually gets into circulation and people are spending it, that can easily lead to inflation and hyperinflation. And that gets away from the Fed. And if everything starts to go up in price, the only way you can stop that is trying to stop people spending money. So you have to raise interest rates and try and get them to keep it in the bank. 5-10%, all of a sudden you say, well, maybe I'll put that money in the bank. But if people are worried that food is going up at 20% a year, they're not going to save money even if you put up interest rates. And with all the debt load, that's just going to crush people. So this is the balance. Hopefully that description has made it clear, the penny dropped for some of you. But this is the huge demand for global investment markets, just like you guys that are wanting to sell at the moment. We've got questions about all the stable coins. I've done some videos on those recently, and gold and whatnot. So there's huge demand from all aspects of the globe for US dollars. That's pushing up the price. It's pushing down the price of other currencies. And normally you'd think that it would push down the price of things like gold and Bitcoin. But it's important to remember that this DXY index that we're looking at is compared to other fiat currencies. So if we actually compare all fiat currencies to real world assets, that's where the US is probably the only currency that hasn't weakened. And this is where we get in these conversations about, well, what is a currency? Some people laugh at gold for being a currency, and a lot of people aren't taking Bitcoin seriously. But now we live in this time and this age where it's just nuts in terms of talking in trillions a day. And at the moment, that's just trying to plumb the different holes. It's all just a game for the forex markets, these traders that are trying to work out what the exchange rate is between Australia and Europe. And you can trade these actual pairs. So if you don't want to trade, say the Aussie dollar versus the US dollar, you can trade the euro versus the Aussie dollar. So the forex markets around the world, they're just enormous in terms of these different currencies, and very inefficient system, as you know, with different banks and different hops to go between different countries. So this is why we need a new sort of a monetary system for just doing cross-border payments, banking payments, business payments, as peer-to-peer payments, and getting rid of the spreads. If you've ever tried to send Aussie dollars, when we pay our bills or when we get paid by an overseas company, you still lose so much money. They rip you off on the spread and whatnot. So there's lots of cool companies. Revolut is one that's out there at the moment that are trying to change this problem. So all sorts of issues with the forex markets, but none more so than people, whether it's the Bank of England or Russia or China, everyone is starting to get clued into the fact that these guys here get to print money out of thin air to buy oil, to export cheap labor, and no matter how much they print, their currency is the only one that goes up when everyone else's currency is going down. Now, more recently, Trump has said that he doesn't want a strong dollar because it hurts their exports to the rest of the world. Australia loves it when the currency goes down because it's the opposite of that problem that we said before. If I'm shipping out my goods and I'm getting paid in US dollars, that is what I want. I don't want a business that's earning Aussie dollars when globally on that world stage, that currency is now worth half as much as it was compared to these other currencies. So tying that all together, we're still getting questions about how you can hedge, how you can get into US dollars. Watch the video I did last week. I talk about the stable coins. They're readily available on places like FTX, and all exchanges have Tether these days. Then you've got DAI, decentralized stablecoins. You can hedge. So if you've got a lot of Aussie dollars and you're worried about it falling, you can put in a sell order, basically shorting the Aussie dollar. And if it falls, you make profit, and that equals out the amount of money you would have lost. Or you can just buy US dollars, and that effectively makes you long US dollars. Now, the how this all ends, and someone asked a good question in our group today about how is this the biggest short squeeze of all time, and I want to talk about what our friend Raul said recently. So let's head over to his Twitter and just run through what he spoke about today. Really good post here. So he's basically saying that this is the dollar crisis. Less dollars available worldwide because of this massive dollar shortage. Everything I've spoken about already so far in the video. So this drives up the dollar, creating a shortage both in the US and abroad. Money printing does not make the dollars available. So they get stuck in the financial system. So the Fed is printing this money, but they're giving it to banks. They're buying assets off banks, whether that's bonds, mortgage-backed securities in the GFC. They're now talking about investment-grade bonds, as I spoke about in other videos. But that money is not going to the real economy, to real people, and that's why it hasn't caused inflation yet. But it's getting stuck in the banks, and the banks are too scared to lend to people. So that's why this system just isn't working. Sorry, I got something stuck in my throat. The next thing, and that's the scary step that the Fed are talking about, is creating accounts where each individual, rather than have a bank account, they'll have an account with the Fed. And this is where you get right down the rabbit hole and into the tinfoil hat stuff about a digital identity, whether or not they want to put a biomarker on you, or just be in your phone or whatnot. But you'll have some way where they can track you, your spending. It's all going back to the Federal Reserve, and that's probably going to have that data and access to the government. So they're almost cutting out banks. And again, I just think that this is the most interesting time in world financial markets, because banks won't go down without a fight. they're rich and powerful. And Jamie Dimon, JP Morgan, they almost created this repo crisis because they just decided that they don't want to lend US dollars. And they were so big, they were almost as important as a central bank or a government. They decided they wanted to invest in bonds rather than lend out to other banks because they thought other banks might be insolvent or it wasn't worth the income to them. They'd rather buy bonds and whatnot. So the system is getting a shake-up. A scary thought that every individual will have a direct line to the Federal Reserve and they might want to print money. Maybe the government turns around and says, hold on, we want to do that. We've saved everyone with our fiscal spending, our government spending. We don't want the Fed to print money anymore. We want to print money and we want an account and we want to track what everyone's doing. This is where it's all heading. Now, the local shortages, domestic shortages of dollars means that money gets hoarded while defaults rise. So all these companies that have issued bonds, they've got to pay these investors and dividends and whatnot. There's not enough money circulating in the economy. They've not got the revenue. They can't afford to do this. They can't afford to borrow more because banks aren't lending. It becomes this spiral. And the shortage abroad, $13 trillion of debt, everyone is scrambling for the few dollars that are available worldwide, just as the velocity of money slows down. So maybe if there was, say, a couple of $1 trillion in the world of US dollars and trade is just booming, China is paying Australia, Australia's investing somewhere else, those US dollars are just flowing around the world. People are buying oil off each other. But at the moment, everyone's in lockdown, so there's no circulating supply. So that same dollar can't actually get spent twice or used by someone to pay down their debt. It's a profit for another person, and they get to pay down their debt. So velocity of money is just not moving, not circulating around local economies and globally. And again, that creates a false sense of, let's print all this money. It's not going to cause inflation because at the moment people aren't spending. But as soon as that changes, I think we're going to get inflation. Don't forget the $13 trillion. It's basically a short US dollar position because foreign dollar debt held by many foreign corporates and investment vehicles is the largest position ever taken in the history of global financial markets. So what does Raoul mean by it's effectively a short dollar position? Well, if I borrow dollars or if I borrow gold and I've got to pay someone back that amount or a number of units of that currency, whatever I've borrowed, if it goes up in value, I don't want that happening. I actually want to go down in value. That makes it easier for me to pay back. So if the thing I borrowed was worth $100 and then it's worth $50, that's a lot easier for me to pay back. So I'm effectively short because I want it to go down. The last thing I want to do is go up. So if it goes up, I'm losing money. And that's the same as when you short Bitcoin or short gold or short the stock market. By borrowing US dollars, you're short US dollars. If it goes up, you lose money. So that's what's this effective short position. So as it is starting to creep up in value, the US dollar index, just like a short position when you're trading crypto, the amount of money you have in your bank account, in your reserves, whether you're an investment bank or an individual or a company, this is the squeeze that Rail's talking about. At some point, your currency doesn't even cover the margin call. So you owe so much US debt, your country hyperinflates away. These are the position that a lot of these other currencies and countries find themselves in. So this is the squeeze where these people are almost getting margin called, and it's just creating this spiral of pushing the dollar up even more. So I hope that all makes sense. It can only mean a massive uncontrolled rally. QE won't fix this. The Fed's created direct swap lines with other banks, like directly to Australia. A debt jubilee, which Steve Keen talks about, would fix this, or multiple trillions of dollars of write-downs and defaults. Once countries start defaulting on debt, bond markets basically aren't worth anything. No one trusts anyone else anymore. Argentina's defaulted on the bonds, and then you say, I'm going to issue another bond now, give me more money. And they say, well, you just defaulted on that. Why? We don't trust you. So as soon as one country defaults, the whole bond market's basically game over. The US dollar is the strength is bringing the world to its knees, just like back in the 1930s. The dollar system is the really big problem. The dollar has eaten all of its competitors, and now it's eating itself because it's too strong. It's going to hurt the US economy. Donald Trump knows that. Eventually, this all breaks after some sort of super spike, just like we get in a short squeeze in the crypto world. And global central banks are forced to find alternatives. This is why they're working on these digital currencies, central bank digital currencies. Governments want their own currencies and stable coins. But I think, as you know, the conversation gets far more interesting when we look at Bitcoin that's global. It's got a fixed set of rules. Donald Trump doesn't get to decide what it is. Japan, they don't get to print more of it to buy ETFs. China can't play games and manipulate it. It is just Bitcoin. It is neutral politically. That halving is approaching. I think we're 40 days away now. It's not being spoken about, and I'd much rather it be this way than being overly hyped. Don't forget, Bitcoin Cash is only 5 days away as well. I've done some videos about that. Go back and watch my Bitcoin halving predictions, where I spoke about how it's really important to watch what Bitcoin Cash does. BSV's also got its hard fork, so we might see a lot of volatility. Miners move away from these coins over to Bitcoin, so you've got to be aware of what's happening around you there. And obviously, ETH and stable coins, we've seen $6 billion rise in terms of the amount of money people are parking in stable coins. A lot of that is in DAI, Tether, USDC. People can get an interest rate on that at the moment. We're starting to build these derivative markets, yield curves and borrowing in the world of DeFi. But one thing a lot of people don't realize is that the halving is happening, and that's very exciting to reduce Bitcoin's inflation rate from around 4% to 2%. But Ethereum really wants to also build in this model where proof of stake, you'll get your rewards, just like Bitcoin miners get their rewards for processing the transactions and securing the network. But they want to burn all the fees. So they actually want to sort of have those things balance and have a very, very low issuance rate, if not even zero, or if there's lots of fees, we could even have a negative, reduction in the actual number of Ethereum. So they're very aware of this. This was a big write-up that I did for our members about ETH being money and how it relates to gold and all that as well, guys. So if you're in the group, just search Milkshake, and this was a post from the 5th of February. Gold has its place as well. It's more bullish for gold, the fact that gold mines are shutting down with coronavirus. That's going to reduce the supply of gold. Silver's in the same boat. Hard assets, what do you guys think? Inflation, hyperinflation, deflation first until we get through all this? Have the Fed just thrown caution to the wind? It's going to completely come back and haunt them, printing trillions and trillions of dollars because they're fooling themselves. That money's not circulating at the moment. People aren't spending it. It doesn't end well, but I think it's just so bullish for Bitcoin and gold and silver. And we'll probably look back and laugh, splitting hairs over, this wick down to $3,000. And I definitely think that Bitcoin is capturing that market share off these other assets. And I think it's going to $100,000 in the next few years. That's probably a good place to end it. I hope you guys have enjoyed that. I hope it's educated you on the US dollar. I've got all the links down below if you want to trade, hedge yourself, use those gold stable coins, US dollar coins on FTX. All the information about gold and silver, all the free resources, or if you want to join our members group and get all my daily updates as well over on the website. So have a good Friday night, guys. Please smash that like button if you've enjoyed it, and I'll speak to you on Sunday night for our weekly wrap-up. Cheers.